Good morning, ladies and gentlemen. Thank you guys all again for tuning in as always. So we'll give it a few seconds here before the stream kind of populates, and that way we get some more people in here before we start rocking and rolling on today's watch list. But as you guys can see by the couple stocks here in the title, you already have an idea as far as what we're going to be watching. What's going on, Wizard Con? Appreciate you joining in, even on here on the YouTube stream. Couple things to take a look at. The stocks that are so far on the watch list, really one of them is news driven. The other two are just regular traders. Good morning, Elias, Joshua, Mr. Green. Good morning, guys. Yeah, so I almost made it yesterday, but I think I'm going to be making that one today. It is a little frustrating. You make these really great videos and then they don't get as many views as you would like, but it's okay. I still know I have some of the best content on YouTube. I just haven't figured out why it's harder for my videos to get views over some other people's. Not quite sure, but that's okay. It is what it is, right? It is what it is. Doesn't mean you're going to quit nor give up. So with that being said, let's see. Yeah, so with that being said, I'm going to start getting to sharing the screen, and then we'll rock and roll. All right, so we're going to touch here. First stock we'll take a look at. So I'm just going to briefly touch on this one. I'm not, I'm not super crazy about this one here. Actually, I'm going to move this back over here. That works better. So first one on the watch list here that we'll talk about is DCPH. So if you look at this one today, you'll notice that it went all the way from $19 to basically $48. It's still kind of pushing in the upwards direction right now. The news, it's just some clinical study, positive phase 3 study, something about how their data went well. And we've seen it multiple times before. A phase 3 clinical trial study does very well and the stock ends up exploding. So it's possible that this is going to move higher on the day. And that's the only thing I'm looking for. I'm only watching it for long because there is no shares to short on Thinkorswim from at least my understanding, and maybe you guys have them. Every once in a while, Thinkorswim will have shares as short for someone's account and then not another person's account. Why it happens that way, I'm not entirely sure, but the only thing I'm watching this one right now for is long plays, and it's because of the solid news and the fact that the stock went from 20 to basically 48, so it's already up 28 points. This is going to have some hype, some momentum that might continue to the upside. So this is simply one just to keep on your watch list. It might end up moving in a manner you like and you want to trade. This one is going to be on a back watch for me. This is not going to be my main watch. This is just one I'm keeping on watch because, well, why not, right? All right, next one on the watch list is going to be ROKU. So ROKU is actually a stock that I was short overnight. So right now the P&L for the day shows down 400, which I am for the day. I'll be down 400, but the trade I only lost 270. So yesterday we ended up getting short like right here, 500 shares. On the first initial drop, took off some shares. Made some money. It was up like 400 or 500 here. Didn't take any money off the table. Wanted just to hold the position overnight. Held overnight. We ended up going red. And really my stop out was going to be above this high of day. So ended up getting stopped out kind of like right here in the beginning of the day. Morning. Took it off. So all in all, lost about 270 with the position. This morning I'll be down 400 on the day, so to speak. So still watching ROKU, both long and short. It's just been on a really nice run since its earnings day. It has a gap here to fill, has a gap here to fill. So when eventually this bullish steam runs out, we should have a really nice pullback day. And that's what I kind of figured we were going to get today, was a nice pullback. But we ended up grinding through after hours and so on and so forth. So still going to be watching ROKU long bias as long as it's over yesterday's high of day. If it starts to break back down and go below that, then I'll start to go back to being short bias on it, at least for today. So really my determining point for ROKU is over or under 136.59. Okay. Um, yeah, that's true. That is true. Tap of the morning. Yeah, that's probably it. That's probably because I don't lie. Give me a second here, just kind of going through a couple comments. Race reactions live. Yeah, earnings reports are a regular thing that we do put on the watch list when companies are reporting earnings, and depending on the company that is reporting earnings, usually we'll mention the big names like Facebook and Amazon and Apple and Google and Nvidia and AMD and pretty much any of the earnings reports that actually look good, that actually have volume, then they'll be on our watch list. But we do not advocate for trying to swing earnings plays as a trade. If you're an investor, then you're going to be involved in the earnings play no matter what. If you're a trader, the only reason you're getting involved in an earnings play is to hopefully win money, right? So it's more of a gambling approach, is trying to make money off a big jump on earnings, whereas if you're an investor, you're in for the long haul, you're involved with the company. So if the company reports good earnings, they report good earnings. If they do bad earnings, you do bad earnings, you're involved, you're invested. But when it comes to trading, we don't really go out and say, hey, buy this before earnings because it might spike. I mean, there's definitely strategies and plays that you can make around an earnings report. But the best and easiest and safest way to going about trading them is just wait for them to report and then follow them the next day or the few days after, right? There's always some money to be made. Where can you find a list of earnings? You could find a list of earnings by simply Googling. You could find it on TD Ameritrade. You could look at earningswhispers.com. You could go to Earnings Whispers Twitter page, where they post a little picture of it. Again, you can find it in a million different places. But usually I use Earnings Whispers, or I'll look at TD Ameritrade. And you know when a company's going to report earnings on Thinkorswim, because if you come to the chart and you just look at it, you'll see this little phone call and these two circles, red circle, blue circle, red circle, blue circle. Those are all earnings reports. Earnings, all earnings reports. So you can simply find it just on a stock just by looking at the chart on TD Ameritrade. Just a couple lights that you it's off Amazon. What do I think about GE? I mean, I don't really have much thoughts on GE. It's still a declining company. So for GE, basically, it comes down to GE is nothing. It's not technical, right? GE is far beyond technicality. It's really all about fundamental on that company. And right now, their fundamentals aren't good. So nobody's buying them, and nobody's truly buying up the company or investing in them, which at some point in time could turn around. So you'd really want to be looking into a company's fundamentals. And I don't personally know a whole deal about company fundamentals. I mean, like I do, but I don't have enough knowledge to sit there and look over years of balance sheets and be like, yeah, this is where the company's turning around fundamentally to buy. No, I don't know that, but I do have a good enough understanding of when things are good and when things are bad from a simplistic view of, if a company's making revenue, what's their earnings? I mean, because I run a business myself, so, whether or not you want to know it, you end up learning it, how much money you're bringing in, what's your cost, your overhead, revenue, taxes, earnings, expenses, assets, liabilities. I mean, you end up learning all that anyways, becoming a business owner. So you do learn a little bit about accounting. And so, but again, I don't know it to the point where I could be like, yeah, this is where the company's turning around fundamentally from poor to bad, So, but I know a great deal of it to the point where I could look at a company and go, yeah, that's a pretty strong company just by looking at how much cash they have on hand, what's their cash flow, again, assets, liabilities, etc. You get the point. But you could learn it too. You could just Google some videos and learn accounting and a couple things about fundamentals. Levy, yep, GGAL did go from 39 to 15 yesterday. Traded it yesterday, made, I don't know how much money I made on it. I think I made 300 or 400 bucks on it yesterday, but GGAL, we did end up trading GGAL yesterday. It's got a massive gap down, so yeah, that could have a good bounce at some point in the near future. Netflix sell, hold, or buy. Top dog, personally, actually rephrase that. For me, pretty much everything's a sell from a short time frame. No, that's a lie because Shopify is probably a buy. Microsoft's probably still a buy. So when it comes to Netflix, for me, I mean, you have Disney competing with them. You can argue that Disney's going to be a good competitor. That's going to take away from some of. Let me put this mic a little bit closer. So you can argue that Disney is going to take away some of the business from Netflix. I mean, that's something that people are talking about. But for me, it's not about Disney taking over Netflix's business. What it's about for me is this long bull run we've been on and the uncertainty that continues to lie ahead, which is economic recession. And basically what it comes down to is if we go into one, which is inevitable and it is going to happen, 80 to 90% of all equities are going to decrease in value. So when someone tells me, Connor, would you like to buy Netflix right now and hold Netflix? I'd say no, because I know that there's a greater chance Netflix is going to be cheaper in the future than it is right now. And that's the way I look at it. It's not that it can't go higher tomorrow or higher in the next month or 2 months, but I know the likelihood of the price of Netflix becoming cheaper is greater than it skyrocketing. So I'd rather put the odds in my favor and take the more, predictable route, which I believe is lower, right? Same thing with, NVIDIA. Same thing with Apple. Same thing with Facebook. I mean, again, if you look back at what happened in 2008, no stock really traded very well. They all got smoked, right? And that's the path that I truly believe we're on, right? I've been on that path for a year and a half in anticipating, what's to come. And whenever you're on the side of saying things are going to go down, you're usually the one that's going to be, hated on the most, right? Because if things are going down, then more people are losing money. If things are going up, more people are making money, right? So you're playing the contrarian outlook. And everybody will sham you and be like, oh, well, see, the market's never coming down. Right? I don't care. I really don't care. The market could go down. The market could go up. Either way, it's fine by me. The market goes lower, things become cheaper. The market goes higher, I just make more money. That's it. So for me, it doesn't really matter what happens. The only thing I really don't want to happen is for us to go into a full-on financial economic crisis and crash, because then things will get extremely hard for not only me, but for you and for many, many other people unless they have ungodly amounts of money. Because if we go into a situation where it is complete financial ruin, right, not that trading, there's always going to be money to make trading, but things are going to change drastically. I mean, if we have a series of hyperinflation, that would be extremely shitty. I don't have enough money to outlast hyperinflation. I don't have enough money saved up that I feel comfortable that if we go through a completely financial economic crisis that, I have a good amount of money, but it's like, am I totally prepared for complete financial ruin? I don't know, right? And so I don't want us to go there. I wouldn't mind a recession where things become a little bit cheaper, but that's it, right? We don't want to see a full-blown economic crash because people lose jobs, things become really hard to get out of. So, right, you go from being in a bubble, the bubble pops, and then you go to the, you take a bubble, it looks all beautiful when the air is in it, and then when it pops, it gets shredded into little pieces, and here you are, trying to pick up the pieces of a popped balloon and put them back together so they can once again blow back up, right? It's not easy to do that. And the only way, right, the way it worked in '08 when we had the financial crisis was, right, bubble popped, housing market crash, subprime mortgage loan was the whole deal there. And when it all said and done, we went through, it was during the Obama administration, and I'm not saying that it was Obama's fault or Obama's a god, because he's not. He's just a man. He's made tons of mistakes, and we all make mistakes, and he's made probably many good things happen that people don't talk about too. So him as a president has nothing to do with it. Just during his administration, during that time is when we had the '08 financial crisis. And they worked with the Federal Reserve, and the Federal Reserve came up with the idea of doing quantitative easing, which is basically, in layman's terms, putting money back into the economy to get the economy moving. It's called stimulus. So it's basically like, I work out, but, I want to take steroids because I want to get bigger. So I take steroids. Well, we all know in the short term, it's going to work great. I'm going to look big and I'm going to get bigger. But what it does to your heart and what it does to your inside organs, right? Because your organs and your heart, those are muscles, right? Those are muscles, right? You don't only have muscle mass as in your arms and your legs and your chest. You have different muscles that are within your body that you can't actually see. And the steroids are affecting the inner parts of your body as well are they affecting the outer muscles, right, that people can actually visually see. So though it looks like you're doing a great job in helping your body on the outside, the inside's actually getting beaten down and it's getting destroyed without you really knowing it because you can't see it. And that's kind of the same thing with the QE back in 2008. When you put in that much stimulus to the market, sure, it's going to move and it's going to get it going. But what are you really doing, right? You're doing an artificial stimulus to something that shouldn't be done. It's not the right approach in theory. So they create another bubble. And the way that they got out of the bubble the last time was with QE, and they reduced interest rates by 5 basis points. If you're not up to interest rates, I mean, you can go search it. I'm not going to go into a whole class here, but they went from, they took interest rates down to 0. They dropped interest rates by 5 full basis points, which brought interest rates in the United States down to 0%, which basically means I could go and get a loan and pay 0% interest. Who wouldn't use free money for free, right? So that helped get the economy moving again, right? If interest rates are at 0, it makes it easier for people to get loans and pay them back because they don't have to pay interest. It makes it easier for businesses to take out loans without having to worry about paying a bunch of interest on a big loan. So then that creates economic stimulus where people are getting loans and they're building new businesses, and new businesses are creating new jobs, and big businesses like Facebook or Amazon or whomever, they can take out these big loans, they can build up their business more, that creates more jobs, and that's how it gets the economy rolling again. So they bring interest rates all the way down to 0. Well, right now, well, not anymore, but we were just at 2.5% for interest rates, right? So let's say we went through a series in which the economy was just as bad as 2008. It's possible that the Federal Reserve may take or think that the right approach to bringing back the economy is the same approach that we took in 2008, which would be a 5 full basis point cut, which then would bring interest rates down to negative 2.5%. So for all of our United States Americans who own a bank account, we would now have to pay the bank to have, we'd have to pay the bank to have a bank account. That just sounds ridiculously stupid. Right? So there's a lot of what ifs in the air right now, and that's what I'm going over, right? All these possible scenarios that we could lead to. And it always leads back to the same thing. Equities are just too overpriced to be buying right now. Gold and silver is better. Maybe some bonds might be better to hedge. So again, I think we're really in an interesting point in the financial world right now in terms of how high equity prices are, what's going on in the bond market, what's going on in gold, things with cryptocurrency, the fact that we have debt levels that are insane, the fact that the U.S. dollar is only worth a few pennies, and the fact that our fiat currency really, truly is on the brink of collapse. And people don't want to believe it, but it is very so much true. And I want to say one more thing. Growing up in the United States is amazing, right? It really has been. Whether it's God or random by choice that I was born here and have the things that I have, and to be able to do the things that I want to do and have all these things is great, right? Because we're very lucky to live in the United States, in the country that we are. And so one thing that has happened by living here, you get surrounded in this bubble. It's like United States is its own bubble, and everyone in it always thinks that nothing bad can happen here because it's the United States. And I always want to remind people that the United States is no different than any other country. And how do I know? Because the same people that run and the people that live in this country are the same exact people that live in the country next to you. They have arms, they have brains, they have eyes, they have ears. There is zero difference between you and I that live here versus somebody else that lives in any other country around the world. Their thought process might be different, sure, but we're the same thing. We're the same race. The whole planet. We are the same race. And we all make the same mistakes. And we all do it. And history repeats itself. So in America, I've always felt we live in this little bubble. And again, for some reason, everybody in America, United States, shall we say, always thinks that nothing bad can ever happen here until you have the financial crisis and the crash. And then we get out of it and everybody forgets that it happened. It's like, oh, well, it can't happen again. No, it can happen again, and it probably will happen again. Right? So always keep that in your mind. So then it leads me to my last thing about this is planning for the future. That's all I've been doing for the past however many years, is just continuously planning for future, putting money away, saving for money, knowing when it's probably right to start buying gold, understanding when equity prices are overvalued and not listening to what mainstream media tells you. Because as we all know, Jeffrey Epstein killed himself, but we all know is probably murder and assassination, but that's not what the media tells you, right? They will do everything they can to probably not tell you the truth. Okay, somehow that's where we've gotten in this world, is that it again. So before we go on to too many conspiracies, right? Always try to be educated yourself, self-educate, and that's where we go with this. Now let's take a look at, I think we have one more stock to look at. That was MU. So I hope you guys like my spiel there. And I'll touch on this, and then I can go back through some comments here. So MU is going to be something we are following long bias. So if you look at MU over the past couple days, it doesn't really matter. I'll look at the 20-day chart here. So if you go back, it topped out at 48, down, 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 down. Now right here, this little move here, it's starting to shift direction, right? We've been on this kind of path. I'm going to try, I don't have my drawing tools on this computer, but I'll try and draw it out. So like, where we had to move down, move down, move down, move down, move down, move down, move up. So we're starting to change that kind of direction there. We were going down, up, down, up, down, up, down, up, down, up. Now we're kind of holding in here. This is where we can get the reverse and a little bit of a long day, kind of breaking over some of these highs. So I'm going to be keeping a close eye on MU today, long bias. This morning pre-market, it still looks really good. I mean, if you look at this, I mean, this in itself is a bullish pennant inverse head and shoulders pattern, and I'll show it to you. So here's kind of your pennant formation, right? And your head and shoulders, right? So you have this move down, left shoulder, down, head, up, down, right shoulder. That's an inverse head and shoulders pattern. Which is a bullish formation that we're going to try and follow to the long side today. All right. Long vertical spread. I mean, yeah, if you want to do a bullish, yeah, if you want to do a bullish spread, that's fine. Yeah, I don't see why not. Give me a second, just reading through a couple comments. Yeah, what's really going on in reality, you're absolutely right. I am too young. Yeah, I must be too young to educate myself on the years of history that have already been. You cannot possibly know anything about the past in this world because we don't know anything that's ever happened before, right? So I respect your comment. You're right. I am just way too young to know anything about past economic conditions and what could lead to the future. If I may, the best way to determine future behavior is to look at past behavior. That's a nice quote. Basically, when you have a yield in the bond market, when you get yield curves or inversions, it's basically supposed to be a flashing sign that a recession is supposed to happen. Long story short, pretty much every single recession we have had has at some point had the yield curve invert in the bond market. So that's basically, again, what you're asking is basically that the bond market is flashing recession signs. Normally we start the live stream right at about 8:30, a few minutes past. All right, guys, I got to get back to our private group. I appreciate you guys tuning in as always. It's always a pleasure, always fun. Hope I didn't bore you guys to death. Hope you guys learned something new today. With that being said, DCPH is on a side watch. ROKU and MU are going to be in the main watch today. So everybody take care. Have a great day, and I'll see you guys all tomorrow morning for another stream. And as you may, make sure to go and hit the like on the video. And then after you're done doing that, go to every other single video that's on my YouTube channel, which is about 1,000, and hit a like on every single one of those. Why? That's because it will help greatly. Appreciate it. Everybody, have a good day, and I'll see you guys tomorrow.